We have Fiona Clouder, Chief Executive at ClouderVista. We have next up is Cormac O'Leary, Managing Director at Electrios Limited. And finally, Robert Baylis, Portfolio Manager at EBA Materials Fund. So to kick things off, it'd be great if we could just get a quick introduction from each of you, and then we can get into our questions.
Good morning, everyone. I'm Fiona Clouder. I'm a former British diplomat. I was ambassador to Chile and the regional ambassador for Latin America and the Caribbean on COP26. That's on climate change. And now I work in the private sector. And what I'm interested in is the interface of mining, energy, and environment issues. So I do consultancy work in Latin America and also through the Ambassador Partnership globally and across all sectors.
Hello, I'm Cormac O'Leary from Electrios Limited in Hong Kong. We are a bespoke lithium-ion battery consulting firm focused on all areas of the supply chain, including upstream, that is identifying projects that are suitable for the energy transition, working with companies to find partners and markets where their projects might be most suitable, and we work on the technical side, which is processing those materials into what might be battery materials or battery chemicals.
Thanks, Robert Baylis from InnoEnergy. So we've got a number of activities under that hat. So one of which is a new fund which we're trying to launch focused on battery material development across the value chain. Second of which is the European Battery Alliance. So this is a sort of network of companies in Europe supported by a mandate from the European Commission to build out that ecosystem in Europe. And as an extension of that now, we're also involved with some activity with the European Commission for development of overseas critical material projects to link into European battery value chain as well. And I think that's possibly three of those areas will be covered today in some way.
So I thought we could start with the US as it's one of the bigger topics of conversation, and then we can potentially move over to the EU. So the IRA kind of hit the ground running with a very with a bang, and now it seems that we're not really having the same conversations that we used to have about the IRA. So why is that happening? What do you think? Were the impacts or the intended impacts, did they actually hit, or where did it go wrong?
I've kind of said something similar myself in the last couple of weeks. I don't know if we could say it's gone wrong, but we're all around for the big announcements in 2022, and then the company applications and project applications, mostly midstream, which might be where they went wrong also, but mostly midstream and downstream, particularly for the US. But they don't just write blank checks. You have to really, after your initial application is accepted, then you have to reach various milestones that require technical know-how. So it's beyond your submission report and your PowerPoint. You need to know how to put these facilities together, and it's a big problem. The US is lacking know-how, and unfortunately they can't partner with Chinese companies who know how to do it. And you can buy the tech, but it's still quite difficult. We saw with CATL and Ford trying to find various ways to work together, and it's the same for separators, electrolytes, graphite plants, cathode plants. So I think it's the one that they say in America, when the tires hit the road, that's when it got a bit complicated. But it's a long-term process, and it looks like Trump's going to get to see the fruits of that. I might claim them as the fruits also of that work.
I'd very much agree with that. I think it's important also to think what an impact the IRA had, not just in the US and direct markets, but in sending a policy signal actually across the world. And so the US was actually probably more forward-thinking than other parts of the world in realizing the need to stimulate the approach for the energy transition. Of course, the IRA is pretty wide-ranging. it has different mechanisms involving tax breaks, grants, etc. But I think, as you're saying, it's one thing to have the policy, it's another to put it into action. But I think one thing the IRA did was actually make other countries think about their critical minerals approaches and what does that mean. And different places have taken different approaches. But also, as I think you've said, this is a very long-term game. It's one thing to put a policy in place. It's another to then actually design your mechanisms to turn it into reality for business and for business and investors to actually yield the results. And so I think what's going to be interesting with the new Trump administration coming in is what does that mean, particularly in terms of US domestic policy, but also the timescales and also the competition across the world for key resources.
Yeah, I think I'll just pick up on a couple of sort of related topics on that. So I guess number one, for some part of the IRA funding, of course, you have to find matching finance, private. So some projects, as we see it today, haven't been able to do that. They've got the opportunity to get the grants and the loans from US government, but can't get the matching finance privately. The second one is, I think that some of the more indirect in production activity like the tax breaks and the credits, that takes a longer time to come through because you need the value chain in place to be able to see that. And I don't think we've quite got there in a lot of instances. So, the parts of the value chain that have been progressing, we're only now starting to see output emerge, I think, which will benefit the industry in the US. But for sure, there'll be some wasted capital. But I think, you're starting to see probably the specific successful areas are starting to appear. Again, that's mainly, foreign joint ventures, particularly with the Koreans or Japanese. But yes, as Cormac said, I think the difficulty will be those more technical, less pure manufacturing facilities where the expertise is lacking and may struggle.
Yeah, so I mean, we've talked about kind of how the IRA was maybe one of the first to come onto the scene, and then it kind of propelled other governments into action. So looking globally, have you seen any positive or, I guess, success stories that kind of mirror what they were trying to do with the IRA elsewhere?
Well, I think in a way it's also too soon to comment. I mean, I think if you look across the world, there's something like 50 countries have their various critical minerals strategies. Sorry, my phone's going off. And all of which are competing for a finite set of materials. But these strategies, as we're saying, take an awful long time to put in place, because it's one thing for a country to send a signal that it wishes to make interventions in the sector, either by direct investment or by subsidies or tax breaks or whatever strategy that they're choosing to take. But there's then a long, long way to go, as we all know, before you actually get the mining to happen. So it's, I think, too soon to see major impacts around the world. But what's interesting is how countries are positioning themselves, both the individual countries that have the reserves, but also key investors. We've talked about US, we've talked about China. I think it's also very interesting to see what's happening with Saudi Arabia, for example, where they have really positioned themselves in the last 3 years, both in terms of the resources in country, but also as global conveners through the Future Minerals Forum, and are also looking to create new partnerships around the world.
Yeah, I don't think we've seen too many examples of the benefits in the US yet, but we've seen the benefits around the world, particularly in West Africa, Brazil, Indonesia, where in 2022 the US promised more or less with the inflation, this is going to be a massive industry. This is going to happen. It's going to be worth hundreds of billions of dollars because we're putting I think it's up to 800 billion now that the IRA might cost the government. Originally supposed to be 300 billion. But those countries, whether they FTA or not, saw this as a green light that this is the industry we can get into. We have the natural resources. We either have to play nice with the US or like Indonesia's doing is trying to become or Japan become a free trade partner or sign a free trade agreement. And they actually got the industries going. Brazil is shipping lithium carbonate and spodumene to China, West Africa as well. Those volumes have come up, hundreds of % in the last 12 months and will continue to rise. So I think that's one of the offshoot benefits of the IRA, where the countries with the minerals saw the green light and got into action and are producing, in cooperation with the Chinese players, battery materials quite quickly.
Yeah, I think you're right, Cormac. That's also a part that's somewhat quite hard to, draw the link between. I think, if you see the amount of investment that's going into Indonesia still from Chinese companies, but often with US or European partners, you kind of got to think that's sort of more of a long-term view to bulk out the sort of supply chain. But again, is primarily being driven by a relatively straightforward local acceptance of those sort of projects. Whereas I think in the case of most of the rest of the world, it's been a bit more difficult to get traction on that. So again, those sort of more indirect impacts of IRA have yet to sort of really appear, either because they're taking time to develop, which is the case with mining projects, as everybody knows. And that's, very many factors that you don't have so much control on when it's, purely domestic capital that, the IRA in the US has managed to sort of drive. Again, I think we need to give it some time to sort of see, but I would say it's been slow to emerge. And I think the amount of capital being deployed to that, at least from a public lens, is still quite small. And I think a lot of organizations, whether it's US or Europe, are still getting up to speed on exactly how to do it and how best to do it.
Yeah. And perhaps if we can just kind of try and think, and the numbers are just enormous about the amount of investments that's needed, and also why we're doing all of this in the first place. And this is the opportunity of a generation. So fundamentally, there are a lot of people sitting in Baku in Azerbaijan at the moment at the COP29 negotiations, trying to address the climate crisis, trying to move the world forward. But as we all know, to make that happen, you have to have the energy transition, but you have to have the energy transition quickly. And that, to me, is the part that's missing in all of this, is the sheer urgency of it. And so people talk about the importance of meeting net zero, reducing emissions to pre-industrial levels by 2050. To do that, you have to actually go 5 times faster than we are right now by 2030 to meet those targets in 2050. To do this, you need an enormous amount of more materials. I mean, estimates are something like 3 billion metric tons of mined metals are needed by 2050. Okay. That needs 2.1 trillion investment in new supply. So we're about to enter into a phase where people are really going to wake up to this, that the climate crisis will hit even more. Governments will come under greater demand, not least from their populations and their businesses and industry suffering the impacts. And people are going to say, well, where are all the materials? And so if you start looking at what's the supply-demand deficit, again, the numbers, I think, are actually quite scary. So the estimates are, say, for graphite, cobalt, what's going to be the supply deficit compared to demand by, say, 2030, you're talking about 46% for graphite, 42% for cobalt, 34% for lithium, 21% for nickel, 15% for copper. All of this needs billions and billions of investment. And then you've got the whole practicality that even if you have the government political will, changes overnight, which as we all know it won't, even if you manage to mobilize the investment that's needed, you then obviously have to locate the source of your assets and turn that into production capability and then the whole processing side of things before you get the real value and the real benefits. And as we all know, mining takes an awful long time with the permitting, the environmental considerations, the community partnership involvement. So there needs to be a radical change and global approach to really make this happen.
Do you have any thoughts on what that change or what are some of the key things needed to kind of make this industry move faster and get investment back into the industry to get these metals that we need?
Well, I'll let the others talk far more from the practitioner point of view because they actually know the reality much more than I can. But to me, it's about an integrated approach. So we don't see enough dialogue and agreeing action. To me, that's the key thing, to actually agree some practical actions between government, the industry and investors. And that's what's really needed to move the dial on this, in my view. But I'll hand over to my expert colleagues.
Yeah, I'd say from the investment lens that, especially when it comes to mining, it's still a very niche area of the investment spectrum. It's a very unique industry with, lots of very practical considerations that are, fundamentally based on largely on geology. So, it does require a particular skill set, and I think we see that within Europe around the appetite for especially upstream or even processing assets, that trying to attract capital into those is very difficult because for a lot of groups it simply isn't something they can easily sort of understand and evaluate very well. But we do see it now starting to emerge across some parts of the sort of capital pool that companies are moving a little bit more vertically on the value chains for these technologies, and are exploring, what's necessary, beyond manufacturing and implementation of particularly low carbon or renewable energy. And I think you even see that from an oil and gas lens as well, whether it's the case of, say, Saudi Arabia, UAE, or ExxonMobil, Total. These companies are gradually moving there. I mean, I think some of the claims are quite bold to begin with, and the reality takes a lot longer. But do see that increasingly coming, and now, a lot of conversations I have are with these more diverse organisations from an investment perspective. But it's going to take some time to get up to speed to fully be able to evaluate some of the opportunities and get the capital involved into it that's needed to get the traction to be able to hit those sort of long-term targets. Otherwise, I guess in a lot of cases it's left to companies or countries that are willing to enable that much quicker, which at the moment, across most of the raw material upstream is China.
Yeah, I agree with you, Fiona. It has to be more global. The IRA is protectionist. It's for themselves. It's not for the rest of the world. And they want to secure raw materials for the US. And that's just directly to compete with China. And that's not going to get us to the targets you're referring to. It's going to, earlier, Fiona, it's involve a lot more global cooperation. Looks like Donald Trump will step back from the Paris Agreement again. Again, I don't think we're going to make the targets at 2030. But on the mining side, they're very vast numbers, right? So I hear all the time, and there's a lot of miners here, that there's going to be a wave of new technical improvements in mining processes, whether it's bioleaching or AI is thrown around a lot as well, to improve efficiency of mines and recover higher grades of material and more materials. I'm not sure if that's going to be possible in the next 10 years, but I would like to hear, if in the mining communities, is that something you feel as well, that there's room for leaps in technical innovation in digging dirt out of the ground. That's my one concern there. But yeah, I think a lot more global cooperation between the EU, UK, and actually everyone's policy is different, right? Because EU has very little minerals really that can access. Canada and Australia are trying to figure out how to utilize their resources, and so they're not going around the world looking for extra materials. They have it, so it's quite different approaches to US and Canada.
How do you solve a problem like Panama?
Very, very good question. And so we see in Panama actually that they have huge copper assets that can transform the economy of the country and the quality of life for people in the country. But of course, First Quantum, first of all, went through years of negotiations to be allowed to proceed. Permission was given, and then we saw an enormous turnaround of social protests that put a stop to the whole endeavour. Now, that, I think, is a very important example of the power of the community and also actually the power of domestic politics. Because why did the then government of Panama not simply plough ahead? Was because domestically they could not afford to further alienate their population. So you have a whole issue there where you have public opinion against mining, and as we all know, mining has a very difficult and in places absolutely terrible history. So public perception is very, very important. There's also, sadly, historically, lots of examples around the world of local populations really being exploited and certainly not listened to, certainly getting little advantage from mining investment. Now, the industry, I think, is making a lot of progress, not least through the leadership of the ICMM, to try and start turning that public narrative round. But trust takes a long time to be regained. I think in Panama, it will eventually sort itself out, but it's going to take a long time. And how can you do that? That has to be about creating partnerships that are of integrity and of real mutual benefit. So it's not just about the tokenism, community consultation, to get the ticks in the boxes on the right forms to get through the permits. It has to be an interaction right from the very start of discovery of the asset and intent to develop that asset. It has to be a way of engaging communities to listen to their concerns and actually address them. And most of all, it has to be about developing real partnerships. And I think that's where Canada has done really great work in understanding that the local people not only own the land, but they have a very important understanding and care of the land, and therefore developing partnerships that are of benefit, that create jobs, address education, healthcare needs, and also crucially address the legacy issues, because mines have a finite lifetime. So what happens when the mine closes down, the mine goes? How do you ensure a community continues to prosper?
Yeah, I think it's a very good point in terms of getting the communities on board to kind of back any projects, and that would help with kind of government approvals and permitting and everything else. So I thought we could just talk a little bit more about the development of the battery supply chains and the batteries value chains globally, and just seeing how these government regulations that we've been discussing so far, how has it really kind of altered the industry? And what do you is this regionalization trend a good way forward, or do we need to take a step back and look more kind of globally and work together? I think we've kind of already come to a bit of that conclusion so far.
Yeah, that perplexes me sometimes as well. Does the UK really needed a full integrated lithium-ion battery supply chain? I'm not sure. Bits and pieces, sure. Assembly parts, maybe processing parts, but the regionalization is, what they call it, grant race or incentive race between regions and countries trying to prop up or develop a lithium-ion battery supply chain, and there was no one really looking at the picture. Canada's got they want to develop a full lithium-ion battery supply chain. So does Australia, and there's a risk, and we've already seen it. If you see the forecast for lithium-ion battery factories, something like 12 terawatt hours or something. And it's duplication. So the Chinese have a lot of it built already, and if we're interested in lowering carbon footprints, why are we building the same things over and over again? What we've run into now is overcapacity. So you don't want to build extra infrastructure that's not required just in the name of sovereignty and regionalization. So I got a little problem with every region trying to develop a fully integrated supply chain.
Yeah, I guess in a lot of places it's sort of preservation of sort of existing industry and ecosystem, isn't it? And trying to transition that to the new sort of more climate friendly focused industry as well. But unfortunately, that opens more global competitiveness that I think in a lot of areas Europe and the US hasn't seen before, because its traditional industry had come through sort of legacy of the Industrial Revolution, really. All of that technology and ecosystem, has been around for a long time. China has grown massively quickly, but also importantly across, sort of leading industry, and that of course becomes a threat when you have sort of open trade when it comes to cost competitiveness. So there is a degree of protectionism now, and a lot of it is based around trying to preserve that. I think that the challenge is trying to sort of push through what has been a lot of sort of short-term headwinds, high inflation, which in a lot of cases I think is kind of par for the course in terms of trying to move a lot of this energy transition forward, right? A lot of it, particularly in Europe, if you look at that, starts with the cost of energy. Gradually we're getting off carbon intensive energy production, but it's very expensive to take that leap. But when it's there, then no reason why it can't be sort of competitive again. So I think that's been a challenge, and I think as a result, it sort of necessitated exactly what part of some of these mineral value chains have appeared where, and possibly what might appear where in sort of future. Europe hasn't yet sort of fully closed the door, but you see now with these tariffs on Chinese-made electric vehicles, a good example of industry sort of preservation measures, even though it probably is to the detriment of consumers in terms of competition and, maybe even the progression of electric vehicles in Europe, trying to move off internal combustion engine as well.
I mean, I think it's no secret that China was really kind of steps ahead of the rest of the world when it came to technology development in this space. So do you think attitudes will change and kind of reintegrate China within kind of the global value chains?
I think this is very difficult to see what will happen in the future. But the reality is the world needs China. The world needs China on the big global conversations on, for example, climate change and energy. It needs China in terms of the processing capacity. I mean, I think something like 70% of the world's processing capacity is currently in China. So however protectionist your policies want to be, you cannot suddenly turn that off. So my own view has to be about how do we liaise with China, how do we address geopolitical realities that on some things there are going to be tensions and difficulties, and let's face up to that. But also there are areas where we can work together. And I personally think it's important to have those conversations, but there's lots of others who don't agree with me, I know.
I don't know. China offers cheap materials at cheap prices and cheap EVs. What's wrong with that? I mean, is that a crime? Might be in some places, but Yeah. I know. China is part of the world, all right. So you can't exclude them from conversations. No, but I work in China a lot. They're more than willing to, at a price, share their technical know-how and help us build the plants and the factories that were required. But these additional tariffs are sending the wrong message. Chinese government's retaliating, encouraging Chinese companies, even in Europe now, not to develop EV factories in certain parts of Europe, which is bad for Europe in terms of jobs and investment as well, because there'll be really large investments from Chinese players who pay European rates to European workers. But there's been a few hiccups when they've tried to do it in the past. But it's basically a recent venture of Chinese multinationals opening in various industries in Europe. They've been in the biotech industry for a while in Europe to some success, and there wasn't really issues back then. But I would like to see a more of a friendly atmosphere towards Chinese companies.
All right, I suppose just a quick kind of wrap up question for you all in terms of way forward. Are there any interesting discussions in terms of new regulations that you're looking that might be coming on board to once again change the environment, or anything that's fallen by the wayside and maybe needs to stay there?
Well, the interesting thing that happened this year wasn't clear in the initial IRA, but the US government now have allowed production tax credits for extraction methods of battery raw materials and processing of those materials in the US or FTA countries or others, which is, so the first edition, they missed the big picture of the raw materials. Now they see that, and hopefully the other regions will see, the extraction of raw materials does require government assistance and should be entitled to tax credits, same as EV makers.
I think a key one in Europe will be evolution of the green taxonomy. So mining currently is under discussion for inclusion, which will open up access to, in particular, new source of finance and based around a certain methodology of how you calculate the proportion of your output in terms of product into those energy industries. And I think that, will at least elevates, I think, what has traditionally been seen in Europe on that sort of level as a bit of an antiquated industry with high impact, not necessarily the indirect beneficial impact that it sort of has on the energy transition. So that, I think, is something to watch. I think it'll improve the sentiment, especially from a kind of political, financial viewpoint of the upstream.
All right, great. Any closing notes?
And my colleagues have commented on some of the detailed approaches. I'd say the thing that we're going to see, I hope, is this greater integration, greater exchange and development of joint action between governments, investors and the industry. And here we are in the City of London, and I actually think the city has a great role to play in all of this.
All right. Well, that's a really nice way to sum things up and to close out the panel. So I want to thank all of our panelists, Fiona, Cormac, and Robert, for joining me up here this morning.
Thank you.
Thank you very much.